Well, there was one banker who thought that the pollies may have a point. Bendigo and Adelaide's chairman, Rob Johanson. And I spoke to him about what a Senate inquiry should look at and how best to stimulate competition among his peers. Well, Rob Johanson, do you think the Commonwealth Bank spoiled it for all banks this week by announcing such a big increase in lending rates?
Oh, I think it was a fight that, or a situation that was waiting to be developed. Somehow all this had to be sorted out.
What do you mean by that? Waiting to be developed?
Well, I think that the political tension about the cash rate as being somehow a proxy for rates, for cost of funds of banks, was a myth that had somehow developed over the last few years, and somehow that had to be broken out.
But the banks themselves, and possibly Bendigo, actually perpetuate the myth by announcing their interest rate increases at the same time as the Reserve Bank.
Yeah, it's been, for the banks, a convenient person to blame. And I think, therefore, it's a good thing that we've got all this out in the open.
Yes, but would you say that it would be a better thing for the banks to announce their interest rate increases at other times?
Well, the Reserve Bank rate is, of course, one critical element in the cost of funds.
But as we're learning, it's not the only thing.
It's not the only thing.
I mean, do you think that the Commonwealth actually made a mistake this week?
I think going so quickly, so hard, may have been a mistake. But I don't know what their own cost of funds is, and that's really got to be their judgment.
Do you expect now there to be more regulation of banks, partly as a result of this, and just in general because of the political angst about banks?
I'm worried that we will have some kind of knee-jerk reaction which will damage the good things we've got out of it, got out of all the reform of the banking system, and that we won't learn the lessons that we should have learned of the financial crisis.
Which are what?
That risk in banks is a thing that needs to be taken account of in the long term, and that banks, the arbitrage that banks can make is between different asset classes, different ways of managing their own balance sheets, are very delicate things, and they need to be tightly regulated over the long haul.
You've said that an inquiry would be worthwhile. We've got the Senate inquiry. What do you expect to come out of it? Why do you think it would be worthwhile to have an inquiry?
Well, I said the Senate inquiry will be worthwhile if out of it we can get a better articulation of what communities expect of banks. This critical thing in the whole economy, we have invested huge amounts in the banks over the past couple of years. I think the government is now up to $1 trillion in guarantees for funding and deposits in banks. So it's very appropriate that the political system, as it were, sits back and makes some judgment about what its expectations of the whole banking system are. I said, though, about another kind of inquiry, which was to let's let the new Basel rules settle down for a while, see how the banking system...
This is the international banking rules.
That's right. And then maybe it's worthwhile having an inquiry on some deeper structural elements about big issues like funding. I suggested that perhaps we should consider whether the current requirement that Australian banks have of sourcing a third or a quarter of their funding from offshore, at the same time as we export capital via our superannuation funds, whether we shouldn't have some inducement, some incentive to leave more of those funds onshore. Is the mix of those superannuation investments is between equity and fixed interest? Does that make sense? Perhaps we should do something to induce some of that. Is the risk weighting that we allocate to different asset classes in banks sensible in the long term?
That's definitely an international issue, that particular question. And it seems to me, biasing bank lending towards residential property.
Well, except, of course, in America there is virtually no residential property ends up on balance sheets of banks because of their leverage rules. In Australia, we have, certainly the major banks, they have great incentives to lend a lot against housing. And we've seen that in the last few years, where in particular the CBA and Westpac have grown their share of lending for housing considerably. And yet now it's suggested that the resources boom is going to be financed largely offshore, from offshore banks. So Australian banks won't be participating in that at all. In there, one reason at least is the risk weighting that banks are allowed to do. And so through our banks, therefore, we're making decisions about where our investments go as a result of those risk weightings. So it's that sort of issue that I think once things calm down, it could be very worthwhile.
Well, a lot of the discussion this week has been about competition. What can or even should be done about bank competition?
Well, we need more banks. We need more players. We have
the government can't create more banks.
No, they can't. And so it's groups like ours, Bendigo and Adelaide, that are needing to expand, and that's what we're planning to do.
You also talked about the returns that banks and their shareholders should expect in future. There was a time during the boom where they were making 20% plus return on equity, and now it's more like 15%. Your bank in particular is making 15%. Is that really what everyone should expect going forward? And if so, does that mean that shareholders need to expect lower total shareholder returns over the longer term?
Yeah, over 20 historically and internationally are very, very good returns. And remember, we went into this crisis with the strong view that we would never guarantee bank deposits. Well, that lasted about a day or two when the crunch really came. So we now do have effectively, implicitly and explicitly, guarantees for banks. So it's as I said before, it's no wonder, therefore, the political system is involved. It wants to be involved in setting.
Well, because you can't expect a high return on equity if you're guaranteed.
Exactly.
That's basically a utility. So, in fact, on that basis, 15% seems pretty high.
Well, parts of banks can be seen as kinds of utilities, but parts of banks do lots of other things. And what we want the banks to do is to take sensible risks to fund, for example, more entrepreneurial investment. We want to, in banks, or we do have in banks, large wealth management businesses, which aren't, in some senses, captured within the guarantee structure. Therefore, there are lots of elements of what is a bank that won't be captured within that guarantee, and so for which other sorts of returns are appropriate. But my point was, if people are expecting that 20% return from banks year in, year out is achievable, they should realise, I think that's unrealistic.
Just on a personal note, at the annual meeting this week, you had a 20% vote against you as chairman, apparently because you've been around too long. You've been on the board for 23 years. So are you going to take notice of that and quit?
Not immediately. Being around for some time can sometimes be useful. Experience can sometimes be helpful. You remember I was around when building societies went through the pyramid crisis. I think that was the last time governments let depositors take the hit.
Thanks for joining us, Rob Johanson.
Thank you, Alan.